This is the Asia Climate Finance Podcast. The series is dedicated to the discussion and analysis of business and finance trends around the energy transition and decarbonization in Asia, the largest energy consuming region in the world. Hi, this is the 19th episode of the Asia Climate Finance Podcast, and we're recording on October 24th, 2022. I am Joseph Giacobelli, the host and producer of the podcast. Today my guest is Andrew Koscharsky. Andrew is currently Energy Markets Project Director at Squadron Energy, a fast-growing renewables and infrastructure company in Australia. He's a very good and old friend of mine, and I can confidently say that he has an amazing depth and breadth of experience and knowledge in Asia's energy industry, or should I say, the full value chain of the energy sector. You can learn more about his profile in the show notes. In this podcast, we will be focusing on his views on Singapore as an Asia clean energy hub, both at the operational level and at the sustainable finance level. We'll also be comparing and contrasting Singapore with Australia and highlight Andrew's take on a few recent developments down in Australia. Note that the views of our guests are their own and are not attributable to any affiliation, past or present. Also, they do not constitute investment or legal advice. Good afternoon, Andrew. I'm really grateful you found the time for this interview for the Asia Climate Finance Podcast today. How's the weather down in Sydney? Hope it's cooler than Hong Kong.
It's pretty average, Joseph, I have to tell you. I've been back in Sydney for about 3.5 months, and I think it's rained every single day. But I also take the opportunity to thank you very much for having me on. It's a real pleasure, and I appreciate the hard work that you're putting in to educate the people about clean energy and the financing behind it.
Thank you. We try our best. Although I could probably find a better show host. But anyway, Andrew, as you're aware, I usually first start asking our guests about their background, and it would be really, really great if you could please tell us about yours, and then, just tell us a little bit, after you tell us about your background, tell us a little bit about how you became a participant in Asia's decarbonization journey.
Sure. I studied psychology and commerce at university, and then I joined Origin Energy in Sydney. I was there for about 10 years, and it was a fantastic place to work because you got to learn the fundamentals, some great training, some very generous people with their knowledge. And I'd like to think I've taken that skill set and passed that on everywhere I've worked in terms of sharing knowledge. Origin was great because I got to learn about retail, wholesale, gas, power, carbon, really the whole value chain. And then in 2011, I was approached to start up the Castleton Commodities business in Asia, which was owned by Louis Dreyfus Highbridge back then. And so we were trading Australian power and renewable products out of Singapore. And then a few years later, I moved to a fund called RCMA, which was a commodity fund owned by Doug King and Mike Coleman, which traded rubber, cotton, coffee, sugar. And we started the energy division. My colleague David and I started the energy division, which was then rebranded into Jade. Now, this is quite important because we were in Singapore and the Singapore market was liberalizing. And it was a fascinating process to watch because they were mirroring the same structure, the same futures, OTC structure, which Australia had that we were very familiar with. And so we began as a market maker on the SGX for electricity futures. And we also started a very successful retailer called iSwitch Energy, which ended up with 100,000 residential customers. And then, I got homesick. And after 11 years, I think it was just time to move back to Sydney. And so I've now moved back to Sydney. But the 11 years in Singapore were just outstanding. Again, I got a background and a very wide exposure to capital markets, to trading, business development. And I was able to achieve things over there that I just would not have been able to achieve in Sydney. So very grateful, very, very lucky to have worked with some fantastic people. And I do recommend that people try and get over to Singapore, or at the very least into Asia, to get exposed to how quickly things happen there, and how rapid a build out of a market can be.
So you came from a fossil fuels rich environment, and then you got involved into the cleaner side of things. Could you tell us a little bit? And I think that journey started with iSwitch, right? Could you tell us a little bit about that?
The journey probably started within Origin, to be honest, because Origin had an extraordinary amount of gas reserves, and then the New South Wales government was selling off its coal-fired power stations. And so Origin bought the power stations. Yes, coal was kind of a dirty word back then, but at the end of the day, Origin had 4 million retail customers, and vertical integration was the right way to go back then. And so at the same time, while Origin did have its foot in fossil fuels, there was a very large renewables push as well, and a reinvention of culture and sustainability that was being pushed by various governments, relatively unsuccessfully by various governments. But I think one of the benefits of corporate Australia, certainly these days, is that corporate Australia probably doesn't wait for government anymore. It just presses ahead by itself. And that's been the lesson for Australia. Private money, corporate money is no longer waiting for government policy. It's going out and getting stuff done by itself. And so that journey continued into iSwitch, and I took those themes to build a renewable retailer in iSwitch, and we were the first ones selling clean energy using carbon offsets, etc., into Singapore. Singapore was quite interesting itself because there wasn't really much of a sustainability movement. iSwitch was formed in about 2017, and really it was very hard to get the idea of clean energy and carbon offsets across to C&I as well as the residential consumer. And then in 2019, you wake up one morning in February and the government suddenly announces that there's a carbon tax coming. Now, bear in mind, Australia took probably 15 years and multiple prime ministers to implement a carbon tax. In Singapore, bang, there it is. So my previous comment about things happen pretty quickly in some areas of Asia is probably suitable for that particular scenario. And so the market had to adopt to a carbon tax. And then from 2019 to 2022, it's been a very strong push in Singapore to understand all things carbon, which I think is grouped with the word sustainability in Singapore. The two words are interchangeable now. And so the government in Singapore has really pushed quite aggressively to embrace sustainability, carbon, and now with that comes investing and trading.
Right. I maybe want to start a little bit of a discussion on Australia for about 5 seconds. I've been saying for a long time that Australia has been relatively successful despite its federal government, and now that finally Australia's got the right federal government, you're getting that federal support, and thus that's reducing risk and making investments a lot more attractive. And I think the difference is that Singapore has been a little bit more consistent. It hasn't. I think you and I have spoken many times before. It hasn't been a smooth ride. It never is. Even for Asia's leader, a clean energy leader, China, hasn't necessarily been a smooth ride. But they've done. I think the government has been committed enough and serious enough, so that it made quite a lot of advances. So how do you see that journey that Singapore has taken? Could you kind of like describe a little bit your interpretation of it, and perhaps where do you see going short term or long term?
It's really interesting to compare the two countries. Australia has all the resources in the world. Singapore has none.
Yes.
Australia. I often wonder what would happen if you put the Singapore government into Australia and took that approach. I mean, stuff would get done, that's for sure. So Singapore doesn't. I suppose Singapore doesn't have the political changeover that Australia has. the stop and start approach, remembering that carbon is a political weapon if you're a good opposition leader. And I think Tony Abbott proved that in Australia when he was the opposition leader. It was a very effective weapon, especially when you have a very close two-party outcome. But in Singapore, it's going to be very difficult in Singapore because the wind doesn't blow and the sun really doesn't shine. I mean, I don't find the capacity factors of solar that impressive in Singapore, and that's why solar doesn't get built out in Singapore. I think to this day, it's taken probably 7 years to build out what would be around about 500 megawatts of solar within Singapore. And it's pretty ordinary, isn't it?
Yes.
And so now Singapore has to rely on its neighbours, Indonesia, Malaysia, Australia, to import significant volumes of green energy. And that really, I mean, it really hasn't started yet. There are agreements in place. There are contracts being negotiated. But it's a hell of a journey for Singapore, because you could argue that Singapore did a lot of the heavy lifting maybe 15 years ago, 20 years ago, when they switched from fuel oil to natural gas. So about 95% of Singapore's generation capacity is gas, piped from Malaysia, Indonesia, as well as LNG. So that's already quite a half-decent step forward over 20 years. Over that period, Australia's reduced its coal dependence from probably 85% in the East Coast grid down to about 65%, maybe 70%. When you're looking at the volumes of coal that are due to switch off in the next 5 to 10 years, that's going to, I mean, it's very significant. And because the wind does blow and the sun does shine in Australia, theoretically, it's achievable and it should be pretty easy. However, the problem is now transmission. And so building out appropriate transmission, finding the money for transmission, bearing in mind that a lot of these existing assets are built quite far away from the load centre, transmission bottlenecks are a very big deal, and they continue to be a big deal, whereas Singapore doesn't really have that problem because it's already got there really is no transmission. There's a lot of distribution. And so their neighbours are quite close. So transmission to Indonesia and to Malaysia isn't that difficult, I wouldn't have thought. Obviously, Australia is quite some way away, and we do all look forward to seeing Sun Cable get up in 2028. That will obviously be a game changer. But I think Singapore is really going to struggle to achieve a level of sustainability by itself, and that's why it needs its partners to help. Whereas Australia, they can do it by themselves and help others. So Singapore and Australia have a natural marriage in many ways.
Right. Can you talk a little bit about the future potential importation of clean energy into Singapore? I mean, there's the ASEAN grid, which I remember I first heard of it when I started my career in 1990, and it had already been discussed for about 10 years. And now it's 2022, and it's still being discussed. But I think, like you said, Malaysia, Indonesia, and Australian importation seems to be quite real. Maybe logistically, importation from Laos would be a little bit more complicated. But could you talk a little bit about the importation there, and then also focus on a little bit on Sun Cable, which I'm not sure how many people have heard of that.
Sure. So when it comes to the ASEAN grid, I think Singapore was interested in it, but didn't really need it until about 2 years ago. And then Singapore's favourable gas position got relieved, and it found itself exposed to international gas prices. And that wasn't a problem until it was a problem. Like most of these energy issues, you don't know it's a problem until it's too late. And suddenly the electricity futures curve and the spot market went from being, $100, $120 a megawatt hour to being $400 a megawatt hour almost overnight. And so if there's anything to drive investment, if there's anything to drive a change in philosophy, a change in a way of thinking, it's a tripling of electricity price. And as a result of that, there are now thousands of megawatts of capacity being planned out of Malaysia into Singapore and out of Indonesia into Singapore. And I'd probably reference our good friends at Sunseap. You know, they're doing a great job. I think they got bought over recently by a major international company, and so that will help Singapore drive investment because it accesses capital, and they've got about probably 1,000, 2,000 megs at least planned from Indonesia into Singapore. So the question is, why does Singapore care? Why does Singapore need it? It can just build more CCGT, et cetera, et cetera. The problem for Singapore is that it's a highly favourable data centre and semiconductor manufacturing area. And obviously those two industries, they consume a phenomenal amount of electricity. I think data centres alone take 12%, and that's having been capped for a few years now because the Singapore grid just can't handle it. So data centre load alone will demand a significant amount of electricity, and that has to be renewable because they're RE100 companies, Facebook, your Amazons, all of those guys, and they're demanding a level of renewable electricity that is not 20, 30, 40%, it's 100%. And so Singapore by itself just can't provide that. So, and when it comes to Sun Cable, it's a fascinating project that's being backed by Mike Cannon-Brookes predominantly out of Australia. It's a $20 billion solar project which will flow via undersea cables into Singapore and Indonesia, thousands of megawatts. 2028 is the expected time frame, and it's a highly it's such an important project because if it's successful and if it gets up, can you imagine what the world will look like and what the possibilities are for other countries to replicate such a project? And of course, it makes tradability of renewable energy certificates much more genuine across Asia. And so renewable energy certificates and carbon credits really do become, in my opinion, a currency across different countries in Asia. So there's a whole number of reasons why that project would be fascinating to get up and running. Most of all because Singapore and parts of Asia need that energy, and it's a good high capacity factor because it's coming out of Australia.
And also it proves that Australia can become a renewable energy exporter, and it'd be one of the first in the world. And then obviously later on you can have things like breaking down green hydrogen or exporting ammonia out of Australia, exporting green products like green steel. I think there was one forecast that said that Australia potentially could be producing 700% more electricity than it actually needs, and that number would go towards green exports basically.
That's right. And I think Fortescue Future Industries is a great example of a privately funded organisation by Andrew Forrest from Fortescue Metals Group, where a huge amount of green hydrogen is being planned, and agreements with the likes of Germany are already being signed. And so suddenly Australia, a country which, yes, is far away from the rest of the world, suddenly isn't really that far away because it will be exporting its own energy through either Sun Cable or green hydrogen into Asia and even Europe. I think it's fascinating.
Yeah, no, it's I'm quite excited about it, especially because 3 or 4 years ago when the Sun Cable project came out, most people thought, really? Are you serious? Nah, can't happen. And now there's a lot of things that could go haywire or a lot of reasons why it could be delayed, but still it's made good progress. And 3 or 4 years later, we're still talking about it. So, something right must be going on there.
And I'll point out that the governments like the Singapore government are embracing the project and doing what they can to make it happen. So it's moved forward quite a lot in the past year because it has to, because it's needed, it's necessary.
Yeah, and it resolves quite a lot of problems. It has a lot of attributes too, as we just discussed. So shifting to talking about Singapore as a kind of a clean energy finance center, and I do appreciate that Australia potentially can be a second center, or maybe can take over Singapore's leadership on that front. Can you talk a little bit about the financing side of things out of Singapore?
So because Singapore is a commodity hub, it does attract the likes of Glencore, Vitol, Trafigura, Mercuria, etc., etc. So it's already got a lot of commodity trading money. Call it oil money as well. Call it metals money. So you've got that cornerstone, and then you've got obviously a lot of property money, real estate money, I mean. Then you've got a whole bunch of other investment money. It's got so many people there with and also high net worth individuals who are looking to deploy capital. And so that makes Singapore a really interesting place, no matter what you're trying to raise money for. And carbon is obviously something which people are now understanding and appreciating a little bit more. And so as a result of that, we are seeing a lot of those large companies looking for projects which originate carbon credits, as well as gives them, perhaps gives them the offtake opportunities as well. So it is a centre which holds a very significant amount of capital, but it's also smart capital, and that smart capital is now coming to the party in terms of carbon investment. And I think that's what makes Singapore more unique than any other part of the world. It's motivated money. It is driven. And so even into Australia, you're seeing a lot of Singapore money. And this money touches, even if you're investing in real estate, that has a carbon footprint. And a lot of buildings are forcing you to achieve a level of sustainability. That's not engineering necessarily. That's carbon, that's sustainability, and that's changing the world. And so a lot of this money finds an avenue into carbon investment through secondary methods, such as real estate. So the carbon money that's being raised has used Singapore very effectively as a platform for raising that money. So Singapore itself becomes a platform. If you're trying to raise money for carbon, we're getting endless calls in Australia for people looking to support renewable projects, because Australia is a safe place to invest. It's transparent for energy markets, and it has a good carbon history in terms of trading these credits and monetizing them. And so that's what makes Singapore quite unique, not just for Australia, but for the rest of the world.
And so we've been quite positive about Singapore's role in terms of what it's doing with its clean energy, in kind of shift to clean energy, I should say, over the next few decades, and principally will be importation. And then secondly, its role in terms of being a sustainable finance hub. How do you think that Australia can be more a greater participant in the Asian scene in general? Because I think we've discussed this many years ago as well, that Australia has got all the attributes, but a lot of companies historically have been very Australia centric, because there's just so many opportunities, and Australia is such a big country. Why bother going outside the country? And if I can mention a couple of examples, you've got AGL, which obviously has got its own problems today, but in the past, as well as Origin, you didn't really see them going out of Australia very much to deploy their capital or deploy their kind of know-how, human resources, etc. So do you see that kind of changing in the future, or?
Yeah, I think that's already changed. Over the past few years, we've seen a larger presence from the likes of Acciona, Iberdrola, a whole bunch of other European and Asian companies, Filipinos as well. So there is more and more diversity of capital entering Australia to support renewable projects. The forward curve has risen substantially in Australia, and I think that helps with investment as well. So there is a much more of a business case now. The new government provides probably a bit more policy pathway and policy certainty, so it ticks that box. So I do expect more and more international money to arrive into Australia, and I also expect more commodity trading house money to arrive into Australia. I am aware of commodity houses that weren't trading electricity before, and they are trading that now. Australian ASX Energy futures products, for example. So all the big guys are trading that now, and the next natural step is carbon and asset ownership. And so you get a much more diverse participant range in the Australian energy markets, which is great. And when you consider what needs to be achieved and what needs to be funded, there's plenty more room to decarbonise the Australian energy grid. Now, when it comes to Singapore and who's going to be the trading platform, where this trading hub will be, I would have said it should be Australia 5 years ago, because Australia's already trading a lot of carbon. Australia's already has a transparent framework, mandated scheme for retailers, but it just never progressed into an international, more of an international footprint. I mean, yes, we have investors who trade and those sorts of things, but in terms of being the place to trade, the place to go to, like I suppose you'd call it the LNG Singapore of Asia. If you've got LNG business to do, you go to Singapore. I would like to see Australia become the place you go to do carbon. And I can't think of many reasons why Australia can't achieve that. But hot on its heels, you've got countries like Singapore who want to be the platform. And so there are multiple exchanges being set up in Singapore for carbon. And they have really caught up to Australia in terms of who is the carbon platform. Where do you go when you want to trade? So I'll be very interested to see over the next 5 years who really does stamp their authority on being the central carbon platform for Asia.
So this idea that there's just so many opportunities in Australia. So there's a lot of inward investment from overseas as well. And the likelihood that Australia can play a greater role in Asia in general is maybe using the wrong word, not questionable, but uncertain right now, just because there's so much to do, so much that can be done in Australia.
I guess there are two parts to that answer. The first one is a physical answer, and then there's a financial answer. When it comes to physical, yes, we spoke about Australia's capability to export physical green products such as green hydrogen, such as sun cable, and that's all a physical discussion. LNG as well. Don't forget LNG. I think gas and LNG is part of the sustainability discussion, because that is still the best firming capacity to help accommodate renewables into a grid. And then we have the financial side of the discussion of, someone's going to pay for this. Once it's commercialized, how do you trade it? How do you de-risk the project, and how do you financially trade it? And so there's always two parts to this. There's the engineering part, and then there's the financial and trading part. And so Australia probably, in my opinion, should be playing a larger physical role, exporting its resources, as we do with coal and iron ore, etc. Green hydrogen will be obviously huge. And when it comes to financial, I just don't think Australia has the financial capacity to export funding into other parts of the world, simply because there's so much to be done in Australia and within Australia. So there's plenty of money required for Australian projects, and they have a pretty good rate of return all of a sudden because of the uplift in the curve.
We've talked quite a bit about investments, whether it's in Singapore or Australia, or in the neighborhood of Singapore, because Singapore is going to be importing green energy. Can we talk a little bit about the how to de-risk projects? I mean, talk about energy commercialization, trading, and risk management, and how clean energy projects can look at de-risk while taking advantage of any potential upside over the long term.
That is a very interesting question, and I think the answer has changed quite a lot over the past 3 or 4 years. when we think about who was building and what sort of companies were building these renewable projects 5 or 10 years ago, they were typically small companies, light on balance sheet, light on cash, raising money, running around town, raising money, selling the dream. And then as soon as they would finish that project, they would flip it to recycle their capital and then go again. I think that that's changing quite a lot. That's now been replaced by guys such as Squadron Energy, where I have the pleasure of working, and strong balance sheet, dedicated shareholders, and you just don't have that need to recycle the capital that much as these smaller guys did 5 or 10 years ago. And so how do you de-risk the project? You probably don't need to sign that long-term PPA for 15, 20 years that the bankers demanded back in the day because of questionable credit. And so now a larger player with a balance sheet has the luxury to sit back and think, well, should I do a long-term PPA or should I just take this merchant and trade it through futures and OTC? Should I start my own retailer? Should I be trading in options? So there's a whole variety of alternatives to what your average developer or renewables owner was doing 5 years ago. So the game has really changed in terms of risk management. And what that means is that companies now have to employ more traders and more risk managers to be trading futures, to be trading OTC, to be originating not just long-term 15, 20-year deals, but to be thinking more about how do I commercialize the next 1, 2, or 3 years. So the game has changed from being a long-term risk management game to being a very holistic risk management game with multiple products and multiple avenues to market to commercialize your energy and to de-risk your book.
But given the incredible and shocking volatility of electricity prices in the wholesale markets that we've seen, obviously all caused by one guy deciding to invade another country and destroying it. But we've seen, like in Europe, prices that were not only never seen before, but not even dreamt about. So if I've got a renewable energy project, even if I have some kind of an energy storage facility, so I can, quote unquote, play the market a little bit better, isn't the optimal situation one where I've got half of my output on a kind of longer term agreement at a set price, and maybe another portion in the market? And would that project be more easily financed than if you're just purely playing in a merchant market?
So let's talk about oil and gas. I know you didn't expect that as an answer, but a large oil and gas company would typically have multiple projects with risk spread across multiple projects because they're not going to hit pay dirt on one well. And so you'd have a portfolio. And likewise, I think a good renewable investor and renewable energy company also needs a portfolio because geographically, the wind won't always be blowing in that one geographical area at a time of high price. And that's why diversity across wind and solar and geography is really important because you'll end up with this gamma risk. Where prices are high because your wind farm's not blowing. And so you get caught out. And so your question is correct in terms of, yes, you wouldn't put all of your eggs into one basket and do a long-term PPA. But I guess what we're discussing is how many eggs do you put into one basket? Should you PPA 40% or 80%? And I think that's up to each individual company to understand their own risk appetite, their own balance sheet. And don't forget, a lot of companies have been ripped apart because of cash flow management, margin, futures margin. So if you're going to leave open a large portion of your book to shorter term trading, you need to be able to fund those margins. And we've seen the likes of the very large commodity houses having to go out and raise billions just for cash flow management. Yes, they're making billions, record P&L billions, but they need to fund the margins. And so every trader needs to ask himself or herself, can I fund my margins? And that comes down to how much you want to leave exposed as merchant and how much you need to lock down for long-term PPA and certainty.
Got it. And so from that perspective, the Singapore market and the Australian markets are going to, in 5-10 years, are going to look very, very, very different, because I presume that when Singapore is saying that they're importing, green energy from Malaysia, from Indonesia, and of course from Australia via some cable, that's going to have power purchasing agreements, long-term power purchasing agreements. Whereas in Australia, as there's been a massive acceleration of green projects throughout the country, and there's so much interest, it's going to be more of a merchant market. Am I thinking about this correctly?
I think every country is different. And when it comes to Singapore specifically, I do wonder who the contracting party at the Singapore end is going to end up being. Will it be the Singapore government themselves, and then it gets split to the existing Gencos, proportioned to the existing Gencos and retailers perhaps? Will it be Facebook, Amazon directly being the contracting party? And so the Singapore answer, and don't forget, they have the luxury to sit down, take a deep breath and take that long-term view, because there's a limited political cycle there. Whereas in Australia, it's kind of a different story. In Australia, we're seeing more and more corporate PPAs where the large company is contracting directly with the developer, rather than a retailer standing in the middle of it. So we are seeing a few different models pop up. I hope I've answered that correctly.
Yeah. I mean, I was just wondering what the purchasing side of green electricity is going to be in Singapore 10, 20 years from now versus Australia. And I think, you've addressed that very well.
Similar market structure, a different political outcome. And so in theory, they should be quite similar, but I just don't get the feeling that they will end up like that way. I think that the Singapore government will stand behind it and be the contracting party. Singapore needs diversity. It will be, these undersea cables will be coming from multiple destinations. Let's not rule out Sarawak as a possibility as well, given their hydro capacity. So there's a whole bunch of possibilities, but someone needs to be standing there bringing it all together to ensure reliability of supply, so that if one of these cables can't produce on a day or has an unplanned outage, the other ones are reliably maintained. And, and I point back to Singapore's gas issues that it had in the middle of 2021, which caused havoc in the market, where some of the piped gas coming from its neighbours was getting turned down. Whether that was because of potential international LNG arbitrage opportunities or not, I don't know. But the fact is, there was under delivery happening on those pipelines, and that caused complete chaos in the market. So reliability of supply matters.
And this is again is from my uneducated uneducated about a lot of things, but one of the many things that I don't know that much about is in Australia 10, 20 years from now, where you have a lot less coal and you've got gas there to back up a monstrous amount of renewable energy. Does that mean that the electricity price at the wholesale level, even if there are kind of extreme weather events, will be a little bit more stable? And will that margin be, the trough and the peak? Is it more likely that it's going to be more narrow than it has been so far in Europe today or in Australia then?
What we're seeing in Australia is an unprecedented event, primarily caused by high coal spot prices and coal outages. I don't necessarily believe. I mean, yes, there's a few issues, but I think it's coal which is the first thing you've got to look at. Eraring Power Station, as well as a handful of other power stations, are having significant coal delivery issues. And these guys are being forced to purchase spot coal in a country which has an extraordinary amount of coal. It's an outrageous outcome. Will that persist? No, of course not. The market will normalise eventually, 3 months, 1 year. But when we look forward 5 to 10 years, the market will normalise. People will take a deep breath. More assets will get built. Yes, coal will turn off, but I find it hard to believe that we'll be seeing the astronomical prices that we're seeing today. And when I break energy price up into two components, being volatility and energy, definition of volatility being anything, say, above $150, $200, then they're two different discussions. And batteries, obviously, a huge amount of batteries being built in Australia as we speak. They will cap out the volatility. And so you're left with the energy question, which is a fuel cost question. And we do, only 2 years ago, or even only 1 year ago, we were seeing substantial negative pricing because of the amount of wind farms and solar panels, et cetera, being built. And so when the coal comes back and the wind is blowing and the sun is shining, you do get to some level of normality, and then the batteries kick in and take advantage of that arbitrage and flatten out the curve. And I guess what you're asking is, where do they flatten out the curve? Does it go back to $40, $50 energy, which is where we were only a year ago? Or are we sitting at $150, $200 energy? If we're sitting at $150 energy, $200 energy in 5 years' time, I would say that there are serious problems in not only the macro East Coast structure, but also politically as well, because that would mean manufacturing is shut down and mums and dads are really hurting. And for a country that has all of the resources, I would find that hard to believe, and personally hard to stomach.
No, it makes a lot of sense. I guess we can running a little bit out of time, because I know you've got a hard stop pretty soon, and already taken advantage of your time too much so far. What are your from a general perspective? What are your recommendations? What would you tell if you were sitting on the advisory board of Singapore, from on the physical side of things and on the financial side of things, what would be your advice to the leadership?
For a few years, I did sit on the market advisory panel for the government in Singapore when I lived there, and I was the chairman of the SGX committee as well. And I always wondered why Singapore didn't invest into upstream gas companies such as Woodside, or into Shell, or into those sorts of assets. Singapore seemed very hell-bent on owning real estate, and I completely understand that. But there was a real opportunity to hedge your energy cost by owning upstream gas companies. Owning your own LNG export business is what I'm getting at. I still don't understand why that didn't happen. I know it's easy for me to stand here in hindsight and all that sort of stuff, but that for me was a no-brainer. So that was frustrating to watch, especially after such a great pathway was laid for liberalisation, having taken part of it, from 2015, watching a fantastic liberalisation process, and the government did a great job, but suddenly found itself linked to international gas prices, and that just shouldn't have happened. And so now Singapore should be investing directly into upstream renewable projects and owning those projects wherever they may be. I know there's a few floating solar farms being built, around the place around Singapore. I'm not talking about that sort of stuff. I don't. That's noise for me. I'm talking about going out and owning the 1,000, the 1 gigawatt projects, being the project owner, and that way you have security over your own supply. Yes, it may be someone else's land and you'll have to overcome that, but you've got to own the asset, or else someone else is going to own the asset. And so, if I view Singapore as a country as being a retailer, I'd like to see it vertically integrate. and own its own generation, or at least its own fuel, in this case being the assets upstream. It's not like they don't have the firepower. I mean, there is Temasek. There's a number of organizations within Singapore that have the firepower and extraordinarily talented people. So why not?
Mm-mm. So that's on the physical side. And on the financial and financing side, for Singapore to continue to attract the talent where that capital gets deployed, not just within Singapore but around the region. Do you think it's on the right track of doing that? I mean, you mentioned the carbon markets has been one of the kind of success stories so far.
Having lived there for 11 years, I found the cost of living escalated significantly over the past few years as an expat. And so people don't just move for work. They don't just move for money and work. They also move for lifestyle. So Singapore will need to continue to offer that sort of lifestyle. And so, wages can't just keep going up forever. So, I mean, it was a great place to live. And again, I would recommend it to anyone. But in terms of attracting talents, I feel that a lot of carbon talent and energy talent will be arriving back home to Australia, no matter where they live, because there is so much happening and wages have increased. And yes, tax is high, et cetera, but we've still got the best beaches. And that's what matters.
That reminds me, I've got to come down pretty soon. Come and see you down in Sydney. Have a beer on the beach. That's really great, Andrew. Just to wrap up, may I ask you for some final thoughts or final takeaways?
Yes. Governments. Let's talk about governments for a bit. Australia offers a great lesson to many, many countries around the world of how to do it, how not to do it. And we've spoken a lot about Singapore, and I know that Singapore does look to Australia a lot to try and learn, mistakes made, success stories, et cetera. And I think it's worth governments, potential policymakers having a look at the history of Australia over the last 20 years and understanding what went wrong and what went right. And now appreciating the fact that people have had enough. And those people who have had enough are high net worth individuals. And they are deploying their cash into renewables because they have had enough. They're sick of waiting. And so a lot of I think you'll find a lot of the projects in Australia are corporate money, are high net worth individuals, not just your usual utility money. It's fresh money. And, shit's getting done because of that. People aren't waiting for governments anymore. They might have to wait for transmission lines to get built, and that's where government really needs to step up. Transmission is a critical factor, as any Australian market participant will tell you. But what I find really interesting is the amount of private money coming in.
Right. I mean, the good news about the positive side of the grid build out in Australia is that at least all of the experts agree, and I think the government gets it, and it's just a matter of kind of lining up all the ducks and go out and do it. So it's always best when the country actually realizes they've got the problem, than not. Fantastic, Andrew. Look, I really appreciate your time. Enjoy your evening down in Sydney, and
thank you.
And yeah, thank you very much for participating in the Asia Climate Finance Podcast.
Absolute pleasure. Well done to you, Joseph, for spreading the word out further and beyond, so people can learn about how important this topic is. Well done.
Thank you, Andrew. Thank you. I hope you did enjoy this episode of the Asia Climate Finance Podcast. I would really appreciate any feedback, topic ideas, etc. My contact is in the show notes. Thank you.